Hey, what's going on, guys? Courtney here from Pippin Ain't Easy, and I just wanted to make a quick video here to go over some of the things that Steve Morrow went over in his video. Some of you guys saw the video, some of you guys haven't. Those who haven't, hopefully you can still pick up some good things here. And those of you newbies, sorry if this video is a little too fast paced for you. I will be making some other videos going over some individual things and more basics. Okay, so what will I be going over? I'll be going over some open and close market tricks, also moving averages, trade confirmations, and weekly cycles. All right, and that's very important to identify the midweek reversal and counting levels. A lot of you guys been exhibiting some problems with counting levels, and that's very important so you understand where you are in the weekly cycle. Okay, so you can make a better trade. A lot of people say, you never know where the market is going, and that's a lie. That's a damn lie if you understand what the market maker is doing. Okay, further understanding of the market maker's moves is a better understanding of the market. Okay, if you understand what the market maker is doing, you understand where the market is going, because you understand who controls the market. Okay, because they do the same thing over and over. They do it over and over again, and the sooner you understand that, the sooner you become a better trader. Okay, so with that being said, let's start off with the open and close trick of the market. Now, what Steve says is price likes to close at the same price that it opened, at the market for the week. All right, price likes to close at around the same price that it opened. And I'll elaborate on that a little bit. That only happens when you have a midweek reversal. Okay, because if price doesn't reverse for the week, price would just continue to rise or continue to drop, as seen here in Euro USD. Okay, there was no midweek reversal, so price opened here and continued to rise over 300 pips. Okay, but going back here, we're in a 15-minute chart here. We're on the pound USD, and you did have a midweek reversal on Thursday. Now, seeing price closed here at 51.33. 51.33 is where price closed. Counting back Thursday, Wednesday, Tuesday, Monday, and then Sunday market open. The market opened at around 51.70 and closed at around 51.33. Okay, that's about 40 pips, guys. All right, so price shot up. Price shot up for the week over 300 pips. Had a midweek reversal and then closed almost 40 pips within where price opened. Okay, how do we use that to trade now? Now we see once again on Thursday we see the midweek reversal, knowing that there's 3 levels of rise or drop in the weekly cycle. And also taking in consideration that price likes to close where the price open for a market week, it's a good idea to take a sell right here, because you at level 1, it's gonna drop at least another 2 levels. So it's safe to say that you can sell here and prepare for a big drop, and as this did here, and I almost guarantee that it'll drop again. Okay. Now, it doesn't always happen. That's why you have trade confirmation. But boom, this exemplifies a perfect setup for where you should sell right here. Let's go to the Australian dollar USD. Here you have the midweek reversal a little earlier. This is Wednesday. Midweek reversal happened right here. Okay, you see that the market closed at 78.46. Counting back Thursday, Wednesday, Tuesday, Monday. And then market open on Sunday. Market opened around market opened at around 78.20. Okay, and it closed at 78.46. That's around 25 pips, y'all. Okay, once again, you identified the midweek reversal. Price dropped 1 level. You know that it got at least 2 more levels to go. So it's safe to say that you can place a sell right here around around London session. It's safe to put a sell here because you're preparing for another 2 drops. So you got a big drop here and then another big drop here. Not saying, you see, not saying that you should have your trade open for 2 days. Some people have long-term trades. Me personally, I like to clock my 20 pips. I stack my trades, 7 trades, 7 times 20, 140 pips for the night. Okay, that's all I need. But as you can see, you have a lot of room to make those 20 pips. A lot of room. Okay, if you trade around London session, boom, you got your 20 pips right here. Okay, but it actually dropped to the next level, 122 pips. Needing only 20 pips out of that, out of 122 pips, you have so much space to clock pips, man, and clock dough. Okay, so here you have the NAS USD. This is actually an interesting example because it's a little different. Here you have the midweek reversal on Wednesday. And as you can see, the market closes, it goes down and it closes at 75.39. Now, that is close to where the market opened. Market opens here at 75.97, okay, within around 60 pips. However, as you see here, after the midweek reversal, it was close enough. It was pretty close to the, it was actually almost dead on to where the market opened already right here. However, also knowing that you have 2 more levels of drop, it's safe to say it will go lower than this. Even though price likes to close around the same price that it opened, it also has 3 levels of rise or drop. Okay, so taking that into consideration, it would still be a nice way to sell around this level. Okay. Okay, now I want to go over something a little bit different. These are trade confirmations. Okay, the things I talked about before showed you where you are in the market, right? But this more so shows you where you're going, which is important so you can clock pips and make money. Okay, so first off, I like to trade off of the high or low of the day, and or off of moving averages, because the moving averages are good to be used for entry points and exit points. Here we have the 50 EMA, very important. 200 EMA, very important. And a lot of people don't use the 800 EMA. This is the purple one down here. Okay, so all right, here where you see this red line, this is where I would normally take this trade. Off the low of the day, off the high of the day, you have the railroad tracks right here, and then what I like to call this the confirmation candle. Confirmation candle being like about 3 to 5 pips off of the previous candle. Okay, but that's best case scenario. Okay, I see the railroad tracks to the high and the confirmation candle. I would get in right here. I would get in right there, and from there to the 200 EMA, which is a good exit point, is 46 pips. Okay, as I mentioned previously, I'm only looking for 20 pips, so I clock my 20 pips way up here by the water, by the 50 EMA. Okay, it's good to know that you're safe. You have room for your move. You're not going into the negative too much before you trade, so you don't have to worry and catch a panic attack. But yes, it's safe to exit right here because of the EMA. But that's best case scenario. And also another confirmation. You can tell that this is a midweek reversal because the previous day's high was right here. Okay, right here. And as you can see, it pretty much lines up with where the railroad track started. But let's see a little sooner than that, right? Okay, so knowing my previous day's high, okay, and right here, this pin touched the high, and it also forms railroad tracks here. And then the next candle, you do see this pin here. So at some point, it was about three pips off of lower than the previous candle, which would be a good point to get in. So let's look at that point right there. About 3 pips off the candle. Boom, right here. Now, if I got in there, I would have waited. We count 1, 2, 3, 4, 5, 6, 7, 8. 1, 2, 3, 4. We would have waited 3 hours for the move. Okay, we would have waited 3 hours for the move. But fine, we still would have got the move. Okay, and you get in right here. That's my 20 pips right here. Okay, and still, if I went down over to the white, EMA, that's 30 pips. Because these it usually trades goes off of boundaries by the EMAs usually. If you want, if you see it past the EMA, boom, this is another good point to exit to be safe. But like I say, don't be greedy. Get your money and get out. All right, and here's another example of the trade confirmation on Australian dollar USD. Right after you see this box, the US session, you see some pins to the high. Those pins signify a move in the other direction. That's the stop hunt there. And you see these railroad tracks here. Okay, once again, railroad tracks. Then you have a candle. I like to go about 3 pips away from the previous candle. Okay, so that's 3 pips right there. Okay, so I'm in the trade. I'm in the trade right there. And how long do I get my 20 pips? Okay, I get my 20 pips right here. Okay, but as you see, it starts to stop right here by the 50 EMA, even though it has a big drop here. But like for those who like to panic, you don't want to panic. Just get out at 20 pips, or in fact, get out by the 50 EMA, because 50 EMA or 200 EMA, those are good for entries and exits. Okay. Alright, now I want to get into the last thing, counting levels for you guys. A lot of you guys were exhibiting problems with counting levels. So let's start a little bit before the midweek reversal. Alright, so down here, this is the peak, where I like to start from, where you had a reversal and your first level. So, boom, this being the first level of rise. Right here. Okay, another level of rise here. Then you have a third level of rise here. Okay, and last all the way here. These are your first 3 levels. Alright, now being that we have 3 levels, you didn't have a reversal, it's still rising. So boom, level 1 again now. Okay, level 2 rise, which is a big rise. Alright, and then level 3 rise. And this is where you have your reversal now. So now this right here is level 1 drop. Level 1 drop there. Level 2 drop. And then it's pretty safe to predict that around Monday morning London session, you're gonna have another drop. It's pretty good to predict that. Okay, but that's why you wait for your trade confirmations to make sure. Let's go to one more. Okay, here we have the USD JPY. Right here we'll start from the W, which was the midweek reversal. So getting our level finder. Alright, so boom, you have your midweek reversal here, and then you have a first level of rise here. Alright, second level of rise after the US session. Okay, and then it maintains until your third level of rise here. Okay, so those are the counting levels. Maybe those 2 examples help you to count levels. I'll be putting up some more videos on counting levels and more specifics on moving averages. But these are the main things that I focus on to understand the market level, the market makers' movements. Alright, once you trade along with the market makers, you have a better understanding of how the market moves, and you can trade along with them. So you're no longer gambling. Okay, you trade along with the market makers. That's how you make your money, and that's how you can do repetitive moves, because you understand the repetition that these market makers do. They move in cycles. They do the same thing over and over. The sooner you get it, the sooner you get money. All right, big pippin', baby.